Good morning, traders. It is Tuesday, the 14th of April, 2015, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quite a bit of macroeconomic news overnight. Key being UK CPI unrounded comes in at negative 0.01% for its first negative reading since the spring of 1960. So we're seeing weakening in the British pound, giving some boost to the gilts. Continued Greek jitters keeps core European yield at record lows. U.S. retail sales were expected to rebound with a vengeance this time after 3 months of declines. They actually came in, advanced retail sales came in at 0.9. It's 0.9 versus 1.1 expected, so they missed yet again. Retail sales ex autos at 0.4 with 0.7% expected. JP Morgan reported this morning Q1 came in at $1.45 versus $1.39 expected, to 24.8 billion in revenue versus 24.4 billion. Johnson & Johnson came in at $1.56 versus $1.52, 17.4 billion versus 17.3 billion. And then Wells Fargo came in at $1.04 versus 98 cents, 21.3 versus 21.1 billion. We're expecting Intel earnings after the close today, so we might see some jitters there, especially in the Dow. And on PPI final demand that came in at 7:30 about a half hour ago, we got 0.2 in line. Ex food and energy, we got 0.2 versus 0.1, so slightly stronger PPI. Looking ahead, what we've got going on. Let's see. Apologize. I had the screen up and now it's gone. Bear with me a second. There's not very much on the calendar, but there is something. All right, here we go. Okay. So looking ahead today, we have business inventories at 9 Central, 10 Eastern, expecting 0.2%. Then we have at 1 o'clock Central, 2 Eastern, we have Fed's discount rate minutes. At 1:15 Central, 2:15 Eastern, we have the U.S. Senate Committee on to consider the Iran nuclear bill. Might see some comments there. I don't think it'll affect our markets. And of course, after the close today, we have at 3:35 Central, 4:35 Eastern, we have API crude inventories week on week. Last week was at 12.2. Crude is presenting an interesting problem that we haven't seen in the past, where supply is just not abating. Crude is bouncing up, but eventually what we're likely to do is to run out of storage. You can only have so many tankers floating around the ocean full of oil waiting to be consumed. But it's just it's an interesting situation. Oil is shaping up to have a pretty strong move. It's in a wide consolidation zone, and it's got quite a bit of energy, no pun intended, quite a bit of energy built into it for the next move. As far as speakers today, we did have Kosher Lakota this morning, and that's really what's on deck today. So let's take a look at the technical picture. Let's look at the bigger picture first. So we've transitioned, last week we've transitioned from the lower distribution to the middle distribution here. We had a hard time closing above 76.5. We finally pushed through and get into the upper middle distribution, and that was on Thursday. and we held this area pretty good. And then Friday, we started right in the middle of that middle distribution, tested down almost to a naked point of control, and then we pushed through into and transitioned into the upper distribution. The upper distribution gave us a target of 2101 even. We hit 2101 quarter, so we took out our target by a tick. Before sellers came in, we pushed lower. We had some weak structure. For those of you who listened in on day trading radio when I was on giving my outlook for the week, know that I was looking for a test of 82 and 81 from the top, and it looked like the market had rolled over and was going to do that. We ran out of time, but overall, yesterday was our first test into the upper distribution. As I said a few weeks ago, and last week, and a week before that, new highs are imminent. There's no real change in the larger trend. There's no reason that I see for the higher time frame, for the OTF or the other time frame at the highest level, to liquidate positions. So the market continues to work in a steady back and forth manner. This is punctuated well by this chart here, where you could see that we've had this climb. So we can see over time how the market's trading. We've had some pretty strong pullbacks. Back in October, we had a really nice rotation down. But overall, the rotations continue. You can see these triangles are pointing up continuously up to the point where we are now, where we're in this triangle. And we've been stuck in this triangle since middle of February, and we've been making lower highs and higher lows. We have a wedge formation here that looks kind of bearish, and we've broken that down a little bit. I've been expecting a push lower to repair some of the structures beneath us, and that's where the 81.75 comes from. So you can see here, after we sold off on the 25th and put in this low at 36 quarter, just missed this 36 point of control by a tick, and pushed back up. We pushed right back up to 81.75, where we found sellers. We see a taper here on these background bars here, this microcomposite. You could see a sharp taper into the 81.75. Then we retest a 39 something, 39 and 75, 39.75, and we pushed right back up into 81.75 again on the 7th. Push down into the 70, 74, whatever, and then we push back up into 82.75, and then again pull back, push into 82, on and on and on. And then we come back last Thursday and we push to 81.50. So you can see that if I put a line through here, you can see the market kind of poking through and falling off, poking through and falling off, until last Thursday, where we hit an air pocket and just blew right through, which is what we expect to happen on an LVN, an area that's building an LVN. So now that we've gone through it, we've pushed through to the MC, to the upper composite here. This composite was created on the last balance zone on the highs at 2101. We pushed through to 2101 quarter, and we've started to rotate, to roll over. And so yesterday, when I came in on the Trader Bite, I said that 96 had a double top with a weak high, nice taper on the bottom. The point of control is near highs, and the market is shaping up to push higher. So I discussed in yesterday's Trader Bite, always available to you to look at on YouTube. I discussed how this is a very weak high, and it's likely to break through at some point. So, and that's what we did. We opened at 2093, and we pushed right through it and up through to this black line, which has been here since the middle of March. Pushed through by a tick, and then we rolled right over. I tweeted yesterday that 97.5, 98, if those areas do not hold, then we're likely to rotate back down and break down through, and the target below would be 90.25. Breaking that, the target below would be 81.82. And we couldn't quite make it. And when we look at the low here, the way we left it, so we have these nice rotations. You can see that the rotation's lower. Here's 5.25, pull up 2.5, 3.5, push down 6, pull up 3.5, push down 4. So reading rotations is very, very important. I know people like to talk about price action and so on, but know your rotations, know your rotation statistics, and read the rotations. That's what provides a little more depth as to who is likely to be in control, just seeing the rotations. And in the last rotation, bounces off 85.25 twice with no taper, which means that the auction actually ran out of time. If it had more time, it was likely that it would push through and into that 82 area, and it could not because the session ended. And of course, I cut off the session when the pit session closes. I cut off the session. On the reopen, it didn't actually follow through right away. It rotated back up. Looked like some margin covering here. And in the overnight, it continued to drift up on the Asian session, back up to the LVN that we left behind at 93.5. It stopped at 92.75, and then with the European, with the UK data, it finally pushed through and broke that 85.25 double bottom left behind from yesterday's close, and through the 82.81 area. And here we are trading 82. This formation here looks incomplete. So the expectation this morning, even though we're in a gap, and we're likely to get responsive buyers back up, this formation here, if it doesn't, if there's a fair amount of time till we open, about 16, 17 minutes, this looks like the low at 79.25 is likely to be taken out. So I'm watching for that. The hypothesis this morning, the key hypothesis this morning, is for it to test lower initially. Looking for a test down through to about 78.75. So I'm looking for it to push through the overnight low and get back into this thicker zone here. So here's where we are in the big picture, 78.75. So I'm looking for it to test this high volume area here, but I'm looking for it also to become responsive once it does that. I'm looking for it to become responsive. The open, it's hard to predict the open. It may just become responsive right away. We're in a gap in the middle of balance, so OAOR open probably has a higher probability. So whichever way it breaks is the way I'm going to look to go. But I am looking for the 79.25 to be tested, but at the same time I'm looking for it to rotate back up into 84.25 and to retest the prior day's range. This is just a pullback as far as I'm concerned. The auction has been really, really good as far as how it's been rotating. Anyway, I'm about to be cut off, I think. So I'm gonna sign off here. There's not much to cover with crude. Crude's expected to go to 55.09 still. Here it is battling. This is in all sessions. Here it is battling in the middle of 52.53. I'm still looking for a rotation to 55.09 this week. We'll see how that pans out. Anyway, I'll leave you with that. Good luck today. And if you have questions, futurestrader71.com. There's a contact page. I also advise, if you cannot follow what I'm saying, I advise you to take a look at the video archive. Take care.